Imagine having a financial safety net that you can dip into whenever you need it. Sounds great, right? Well, that's exactly what an equity line of credit can offer you. It's like having a financial lifeline that's ready when you are, providing you with the flexibility to fund whatever your heart desires, be it a new home renovation or an unexpected expense. It's a gateway to financial freedom that many are yet to discover. Intriguing, isn't it? Let's dive deeper to understand how it works. An equity line of credit, often referred to as a HELOC, is not a complex financial instrument. Now let's unpack this. Picture your house. It's not just a building where you live, it's an asset. And over time, as you pay off your mortgage, the value of this asset increases. This value, the difference between what you owe on your home and what it's worth, is called home equity. So, a home equity line of credit, or HELOC, allows you to borrow money using this home equity as collateral. It's like a credit card in that it's a revolving line of credit. You can borrow up to a certain limit, repay it, then borrow again. The credit limit on a HELOC is typically set by the lender and is based on the amount of equity you have in your home. This limit is not set in stone and can change based on factors such as fluctuations in the market value of your home or changes in your financial situation. Now let's talk about interest rates. A key feature of a HELOC is that it has a variable interest rate. This means the rate can change over time, usually in line with changes in a benchmark interest rate like the prime rate. Because of this, the amount you owe in interest can increase or decrease. A HELOC can be a useful tool for financing large expenses like home renovations or education, but like any financial instrument, it's important to understand how it works before diving in. You need to be aware of the risks involved, like the possibility of losing your home if you can't repay the loan, or the potential for higher interest payments if rates rise. Now that we've covered the basics, you might be wondering, how do I get one? Obtaining an equity line of credit is not as daunting as it may seem. So let's delve right into the process. The journey to securing an equity line of credit begins with understanding your eligibility. Lenders typically examine several factors. First and foremost, they look at your home's current market value. The higher the value, the larger the credit line you may qualify for. Secondly, lenders evaluate your existing mortgage balance. By subtracting what you owe on your mortgage from your home's value, lenders can calculate your home equity. For example, if your home is worth $200,000 and your mortgage balance is $100,000, your home equity is $100,000. To qualify, you'll also need a solid credit score. This is a numerical representation of your credit worthiness, usually ranging from 300 to 850. A score of 700 or above is generally considered good. Now let's move on to the application process. To apply, you'll need to provide your lender with certain documents. These may include proof of income, bank statements, tax returns, and a recent appraisal of your home's value. Once you've submitted your application, the lender will review your documents and evaluate your creditworthiness. This process may take a few weeks. If approved, the lender will inform you of the maximum amount you can borrow. This is your credit limit. The final step in the process is the approval. Upon approval, you'll receive a HELOC account number. You can now borrow against your home's equity up to your credit limit. Remember, an equity line of credit is a form of revolving credit, like a credit card. You only pay interest on the amount you borrow, and once you repay the borrowed amount, your credit line is replenished. Great, you're now familiar with the process, but what can you do with this line of credit? Stay tuned because up next we'll be exploring the various uses of an equity line of credit. Scene script. An equity line of credit can be your key to financial flexibility. Let's delve into the potential uses of an equity line of credit. Picture this. You've been living in your home for a good number of years. It's comfortable, it's cozy, but it could use a touch of modernization. Maybe that kitchen needs an upgrade, or perhaps you've been dreaming of a beautiful outdoor living space. Home renovations can be expensive, and this is where an equity line of credit comes in handy. By using the equity you've built up in your home, you can fund these renovations without depleting your savings. Now let's consider another scenario. Over the years, you've accumulated a variety of debts: credit cards, personal loans, or maybe even a car loan. Each of these has its own interest rate, its own payment schedule. It can be a lot to keep track of. An equity line of credit can be used to consolidate these debts into one manageable payment. This can not only simplify your financial life, but also potentially save you money if the interest rate on your line of credit is lower than the rates on your existing debts. But what if disaster strikes? Maybe you lose your job, or an unexpected medical expense pops up. An equity line of credit can serve as an emergency fund, providing you with access to cash when you need it most. It's a safety net that can give you peace of mind in uncertain times. However, it's worth noting that using an equity line of credit does involve risk. Your home is used as collateral, and if you're unable to repay the loan, you could lose your home. Therefore, it's crucial to only borrow what you can comfortably afford to pay back. As you can see, an equity line of credit can be a powerful tool, but like any tool, it needs to be used wisely. Remember, with great power comes great responsibility. This saying rings particularly true for the world of finance, where the power to tap into your home's equity should be wielded with wisdom. So let's delve into the do's and don'ts of using an equity line of credit. First, the do's. Do understand your borrowing capacity. An equity line of credit is typically a percentage of your home's appraised value, minus the balance owed on your mortgage. Therefore, knowing your borrowing capacity can help you make informed decisions. Do use your equity line of credit for value-adding purposes. This might be for home improvements, education, or other investments that increase your financial stability in the long run. Do ensure you have a solid repayment plan. Unlike a traditional loan, an equity line of credit allows you to borrow as much or as little as you need. However, you must repay the borrowed amount with interest, so having a repayment plan is crucial. Now, on to the don'ts. Don't use your equity line of credit for frivolous spending. It can be tempting to use the funds for a lavish vacation or a new car, but remember, this is not free money. Don't forget about the variable interest rate. This means your payments could increase over time. So, if you're not prepared for the potential rise in interest rates, an equity line of credit might not be the best option for you. Don't ignore the possibility of a home market downturn. If the value of your home decreases, you could end up owing more than your home is worth. And finally, don't forget about the closing costs. These are fees you'll need to pay when you open your equity line of credit. They can include appraisal fees, origination fees, and more. Navigating the world of equity lines of credit can be complex, but armed with these do's and don'ts, you're in a better position to handle it responsibly. Now that you know the do's and don'ts, you're well equipped to handle an equity line of credit responsibly. So, we've covered a lot today. Let's quickly recap. We started off by diving deep into what an equity line of credit is. It's essentially a loan where your house acts as collateral. It's a flexible option that allows you to draw funds whenever needed, up to a certain limit, and interest is only charged on the amount you use. We then moved on to the process of obtaining an equity line of credit. It's not overly complicated, but does require some preparation. You need to have a good credit score, a stable income, and a decent amount of home equity. It's also crucial to shop around for the best rates and terms. Next, we explored the various uses of an equity line of credit. It can help you finance anything from home improvements to educational expenses, or even to consolidate high-interest debt. The possibilities are vast, but remember, it's not free money. In the penultimate section, we discussed the do's and don'ts of an equity line of credit. It's important to use it responsibly. Make sure to keep up with your payments to avoid falling into debt, or worse, losing your home. So there you have it, a comprehensive guide to understanding and effectively using an equity line of credit. Thank you for joining us today. Remember, an equity line of credit is a powerful tool, but it's up to you to use it wisely. Until next time, stay financially savvy.